Pretty much, man. It started, man, with just people asking me, Terry, how do you go about raising money? I've raised money for a long time, man. For pretty much anything I ever wanted to do.
So tell me, what makes an entrepreneur more investable?
Okay, put the play together, because somebody would invest. Like, I would invest in something like that. If you got the play together, hey, here's 5K, here's 10K. Mm-hmm. You know what I'm saying? If it makes sense. Mm-hmm. I might not agree with the idea, but the data never lies. Mm-hmm. So that's why data is so important. Mm-hmm. You see what I'm saying?
Yes, sir.
Because you can't fight against data and statistics.
Right.
So I might not like you, I might not like the idea, but the data, the numbers are the numbers. Mm-hmm. That when if I give you 10,000, 20,000, 100,000, whatever it is, you're not gonna go and add to your Jordan collection. But for me, I like to be honest, I operate more from the entrepreneur side. Mm-hmm. So I'm getting money.
Okay.
So, I'm getting money. So
I wanna be a billionaire. I ain't getting no sleep till I see $1 million every week. I wanna be a billionaire. I ain't getting no sleep till I see $1 billion every week. I wanna be a billionaire. Billionaire, I wanna be a billionaire. Billionaire, I wanna be a billionaire. I ain't getting no sleep till I see $1 billion every week. I wanna be a billionaire.
Ladies and gentlemen, how you doing? Welcome to another episode of Sleep Is For Billionaires, the podcast. I am your host, Jonni Vegaz. Now today, I got a very special guest on my show. Ladies and gentlemen, you're in for a treat, so take some notes. This man is a serial entrepreneur, philanthropist, an author. I like to call him Mr. Biggs, but his real name is Terry Briggs. Ladies and gentlemen, in the building. How are you, brother?
I'm good, man. Glad to be here, man.
Pleasure to have you.
Loving the energy already. Let's go. Let's go. I feel like I'm in the studio. Let's go. We about to drop something. Good.
It's like Madison Square Garden, baby. Having you on board, you know what I'm saying? Well, first and foremost, my brother, I'm glad to have you here. You know, we met each other not too long ago, but the vibe's been positive from the beginning, and I look forward to building this relationship long term. So thank you for your existence, my brother.
Thank you, brother. Same for you, man. I think we vibed that. I met you through. I meet your friend Nate.
Nate Pele.
Nate, and I forgot what event that was, and just connected and vibe, man. So I appreciate the relationship. I'm a relationship guy, man. So I love deepening those relationships, man. So I appreciate the invite on the show.
Right, man, and I see that, man. Especially now, sometimes things are so transactional with people. They neglect to build a relationship and don't understand that building a relationship can build a partnership, which will end up, doing a bunch of things that we never even thought we can do from the beginning.
Right.
You know what I mean? So I can appreciate that, my brother.
Yes, sir.
But the reason why I brought you here, man, because I see you got this book out, Investor Magnet. You know what I'm saying? You see him out here. You know what I'm saying? So I want to just dive straight into it, man. Like, tell us about Investor Magnet, man. What's that all about?
Pretty much, man. It started, man, with just people asking me, Terry, how do you go about raising money? So I've raised money for a long time, man, for pretty much anything I ever wanted to do. Mm-hmm. And so people, they've been asking for a long time how you go about doing it. So let's just put together some type of book, of course, to teach people, because we don't got time to help everybody.
Correct.
So we titled the book Investor Magnet, the entrepreneur guide to attracting investors to your brand, your business, or product, or big idea. So that's just kind of how the process started. So just trying to help as many people as possible, man, because a lot of people don't understand that there are potential investors everywhere. From family and friends to the neighbor next door, angel investors. There's people around. So I like to say, listen, if you got a good idea, for example, this podcast, you and I talked about it. There's people who might say, hey, man, I like what you're doing. And what they're going to tell you is, if they love what you're doing, they're going to say, put it together, put a plan together. So, but a lot of people don't know, what does that look like? Okay, what do you mean put it together? So what I do is teach people how to do that process, how to not only attract investors, but also how to get them to cut the check. So that's kind of what we're teaching.
Got it. Okay. So tell me, what makes an entrepreneur more investable?
Right. So for me, if they're more investable, I like to talk about credibility, right? If you have a business, or if you have an idea, right, and you come to me and you're sharing with me, we were just talking about this last night, we were creating some content about doing all that research, data. If you come to me and say, yo, Terry, I got this dope podcast, I'd love for you to invest into it, right? And then you say, hey, well, let me show you the market. Hey, podcasts are set to grow by whatever percent, 20%. The average revenue, if once we get going is this. We're going to make money from sponsors, advertisers, this, that. We can make money from here, there. So if you as an entrepreneur are showing the investor, like, man, I put all this research together, I got the plan, we got revenue sources, I got my business model in place, I got distribution in place, I got marketing in place, I got branding in place, I got partners in place. You see what I'm saying? So when you have all these things in place, that to me, you're more investable, because now as an investor, you've already figured it out. So most investors don't want to pay for you to figure it out. Some people will, depending on, like, if you're a startup, like a tech startup, and you got an idea, a hypothesis, and then you're trying to figure it out, they will invest money to kind of like tweak the idea. But most people who are not those type of investors, they don't got time for that. So it's like, okay, if you got it, if you already figured it out, you already got partners. I call it de-risking investors' investment. So if you've already put all these things in place, my G, you're so much more investable than somebody else who just got an idea. Because I don't want to invest in just the idea. I want to invest into the person who's took it from idea to go mode.
Got it.
You see what I'm saying? So those are the things that you can do to become more investable. Like, put the play together. I like what Les Brown says, that you said a long time ago. I think it was a quote from somebody else, that it's better to be prepared for opportunity that you don't have than to have an opportunity and don't be prepared. You know what I'm saying? So I've lived by that. So taking that over to the investor world for an entrepreneur. If you think you got something, a brand idea, an existing business, a big idea product, put the play together, put the plan together. So when somebody comes along the way and they say, man, I like what you're doing, guess what? Only thing boom, email, it's gone.
Yeah.
You see what I'm saying? So that way it's ready. You're not like, oh, okay, yeah, let me put it together. Give me like 2 weeks. Like, nah, bro, like, if you know that you need a potential additional cash, be ready for the opportunity. Because that's all it is. The success is like opportunity and timing. You know what I'm saying?
Yes, sir.
So like, and I share my story, like, this is real story, and I don't share this in the book, but I had got funded by, this wasn't a traditional investment. This was an event I had put together with music producers. This was like back in 2000 and I don't know, 5 or something like that, a long time ago. It was called the Next Super Producer. So at that time, Scratch Magazine was a big thing back then. Editor-in-chief was Jerry Barrow. I partnered up with them, Scratch Magazine, Jerry Barrow, and the Records, the Special Ops team. MySpace, which was still kind of popping during that time. And so I was trying to do this beat battle type of thing, but I wanted to do it like a commercial version. Like, I had always seen beat battles in New York, different places, but I had never seen nothing commercialized.
Right. So
we were trying to do a 16-city tour. At all the Sam Ash music stores, because Sam Ash had bought the Mars music stores.
Okay.
I don't know if you know Mars Music. So Mars used to have stages inside of their facilities. So Sam Ash bought it. So one day I went into the Sam Ash. I was in LA, flew back to VA where I grew up, and I walked into a Sam Ash, talked to the owner, and I said, I would love to do a beat battle here, right? He was like, connect me to the corporate office in New York. And I emailed him. Sammy Ash emailed me, and I thought it was the Sam Ash, but it was like the son or grandson, whatever. Yeah. And they said, hey, I like the idea, send me the plan. Had already had it together. Yeah. I sent them the play. They flew me up to New York. They sent me like $10,000 or $15,000 to start.
Sweet.
You see what I'm saying? Yeah. So, but I had to play together because I approached them like I was ready. So that's what I tell entrepreneurs, like, yo, if you got a good product, like I was reading something online the other day about this lady, she got like books. So she wants to go full time with her kids' character books. Right. Okay, put the play together, because somebody would have, like, I would invest in something like that. If you got the play together, hey, here's 5K, here's 10K. You know what I'm saying? If it makes sense. Right. So that's what I say, to be more investable, like put your plays together and just be ready for when the opportunity comes.
That's amazing, man. I hope you guys are taking notes, man. He's dropping some jewels right now, man. Yo, so talk to me about the best investment you would say that you've made and the worst investment you ever made, and the outcomes. The
investment that I've made, I would say the coolest investment that I've made was into a podcast featuring somebody, which I don't want to drop any names because sometimes, that one kind of went south a little bit. But it started out as a really, really great opportunity, and it opened up a lot of doors for us. So on one side, my media company raised I think 1.5 million was the raise. So we invested, a couple 6 figures into the kind of podcast structure, and it created a lot of opportunities for us. Inside of that kind of investment, like we bought into like Ice Cube's Big 3 team, part of that investment, but we also invested into former NBA stars podcast.
Nice.
So that opened up a lot of doors for us. So that was really exciting, for me, as both as an entrepreneur, but also on the investment side.
Nice. So what about the investments that went south or that didn't go according to plan? Talk to me about those failures.
Well, for me, I be honest, I operate more from the entrepreneur side. So I'm getting money.
Okay.
So, so I'm getting money. So I'm gonna do more investments through, our company Beyond Sports Media. For myself as an entrepreneur, I'm getting investments. So I'm teaching you the same thing that I do. All day, every year. You know what I'm saying? So
makes sense.
So that's what we're doing.
I ain't putting no money out, just give me the money.
Yeah, we're getting it. Unless we're talking about investing in stocks, crypto, real estate, something like that. That's kind of where I like to put my personal investments in. Unless it's something that's just so dope that I want to be a part of. I'm like, I need to put some money in. But more or less, I'm going out there investing. I'm getting cash.
Got it. Makes sense.
So I'm teaching you to do the same thing I'm doing.
Okay. No, that's a fact. I love it. But even with this endeavor with Investor Magnet, you're investing into this, right? This is an investment for you, yes?
You mean the actual...
The book.
Oh, the book, the course, the brand.
Yeah.
Of course, 100%.
Right. So, can you break down the business of being an author, right? Because you're investing in yourself as an author. You took the time to put the money together, the writing, the editing. I'm sure you facilitated different partnerships to do distribution, and I'm sure you have a plan for monetization, right? So you have a projected ROI in the midst of all that.
Right.
So that's what I want to highlight. So can you break down the business of being an author with this investment?
Well, the ebook is a little different. So the ebook is considered like a low ticket offer.
Okay.
Right. Just like it's like digital marketing, like ClickFunnels, right? So it's the ebook is not done like traditional like marketing like you would do like with a regular book, like publishing, because we're not printing this book out. Right. It's just an ebook. So this is basically a low ticket offer, what they call in digital marketing, for the other products that we offer, which is like the one-on-one coaching, the group coaching, the mastermind, the live event that we got coming up, the Investor Magnet playbook. So this is more like, hey, go to our website, you'll be able to get the ebook, and it's the funnel a potential customer or client into all the other offerings. So it's not the traditional, hey, launching this ebook, I'm not putting it on Amazon, I'm not looking for distribution partners. Everything is through digital marketing, 100%. So it's a different formula.
Gotcha. So this is bait for the other stuff we got going on.
It's a low ticket offer. It's what we call it. It's an LTO, is what they call it. It's called a low ticket offer.
Got it. No, that makes perfect sense. Okay, I see the play there. I see the play. So tell me, what are the pros and cons of working with investors?
Yeah, pros and cons is, if you have an idea, you got a business, existing business, you potentially can get all the cash that you need to do what you got to do, or some of the cash that you need to scale up the business or develop a product, launch a product. The cons is, of course, you may have to give away, or you're going to have to give away either some stock, some ownership, or either some type of revenue share. So you're going to have to share in that. So I wouldn't say it's really a con, but it becomes a con if you have an issue with that investor. Say you guys don't see eye to eye on something down the road, and now it's some beef. Right, so depending on how you structure the contract, it could be an issue later. Another con is if you, as the entrepreneur, mess up that money. So it's not really as much as I've seen more the con side dealing with entrepreneurs with no integrity and character than investors not doing what they're supposed to do. Because the investors, they're giving you the cash. That was up to you to go out there and make it work.
Right.
So me as an investor, they're trusting you that, hey, the plan that you pitch me, you're going to go out there and do it. That when if I give you 10,000, 20,000, 100,000, whatever it is, you're not going to go and add to your Jordan collection. Real talk. Right. Or you're not going to go like, oh man, it's luxury car time.
Right.
Like, nah, man, your job is to take this money and you have a fiduciary responsibility to make sure you do what you have to do. Fun fact, when my first tech idea with the company was called Trend Chirp.
Yeah.
The idea of the company was to connect you to people, places, and things relevant to how you're shopping at the moment. So if you were out shopping online and then you shopped at a physical store, and then you would put into the app every place that you were shopping, it would connect you to people who were shopping just like you.
Got it.
Right? And products that, so you ever been in Amazon's people who bought this, bought that?
Yep.
So we took that to the next level. So we took every place that you shop, online, offline, everywhere, and we said, hey man, these are people who's buying products just like you. So I thought it was a connection. It would be a cool idea to connect with people based off of our shopping experience, the way we spend our money.
Yeah.
But anyway, so my first investor, first investor I had on deck, I think I was trying to raise $2 million, right? So I went to Silicon Valley, met this guy, African-American guy, great guy. And
Is that the David gentleman you referenced in your book?
No, that's somebody else. Okay. So we go to connect, drop off my business plan, everything super tight, and he's like, hey, I'm in. Mm-hmm. So I fly back. See, this is my beginning days.
Yeah.
Right. So I fly back like, man, I'm about to give me a Bentley. You know, I'm about to get something. I'm about to go in.
You gotta add to the Jordan collection.
I'm about to add to the Jordan collection. Let's go. Right. You know what I'm saying? So anyway, so I remember, getting a call maybe like 2 weeks later, say, hey man, we still in. We're not gonna do the full $2 million. We'll give you $500,000, but we're gonna give you an MOU for half. You got to find another half. So that was part of that whole story. But man, that's a true story. Yeah. But a lot of people just think about situation with FTX right now. What happened?
Man. Yeah, he lost like what, $6 billion, $16 billion.
But what was he doing though? He was using the money there like his own piggy bank, making moves where that wasn't his money.
Right.
You see what I'm saying? So like you have a responsibility, man. Like if I invest, I don't care if it's $1,000. If you say, Terry, I need $1,000 to do something, I give you $1,000 to go do that. Don't go do something else. Right. So again, I've seen more cons on the other side of entrepreneurs not doing what they said they would do with the money. Real talk.
I got you. That makes sense. Yeah. Do what you say you're gonna do. Because that pretty much builds trust, and then it unlocks more money. You know what I'm saying? For future investments, if you're looking to continue getting investments for that same investor. So yeah, build that trust. You know what I'm saying? So do what you say you're gonna do.
Credibility.
Right. That's what it's all about, man. So tell me, how can an entrepreneur attract an investor without having an established business already?
So basically, people invest in ideas all the time, but you got to turn that idea into a plan. So that's kind of the journey, right? It's okay, I got this dope idea. Okay, now put the plan together. Again, do the research on the market, do the research on the opportunity, do the research on the competitors in the space. Poke holes in the competitors in the space. You're looking for opportunities, right? If you look, maybe you can do something. Say, for example, if it's a physical product, and maybe it's something that exists, and you just trying to tweak it a little bit. Maybe you can change up packaging. I'm just throwing you ideas.
Right.
Packaging is better, or you might see in your research that some of the companies, they have horrible customer service. So now I'm gonna create a company with amazing customer service, and I'm gonna put that in my marketing. The customer service company, but the product can be toilet tissue. I don't know. I'm just saying, for example. So it's like you're just finding an opportunity in your market. So that's why you're doing the third party research, data statistics. I use when I'm reverse engineering potential competitors, I'm using a software like it's called SEMrush or like SimilarWeb. So like I reverse engineer what everybody's doing, where they're getting their traffic from. So again, it goes back to what I was saying earlier, is to be when you ask me how do I become more investable, it's like doing all that research and showing me as an investor like you have it's ready to go. That you have something that's sustainable. You have a product or an opportunity that will generate based off of the data, because I might not agree with the idea, but the data never lies. So that's why data is so important. You see what I'm saying?
Yes, sir.
Because you can't fight against data and statistics.
Right.
So I might not like you, I might not like the idea, but the data, the numbers are the numbers. You know what I'm saying? So that's why I teach people to like make sure that those numbers are tight, because at that point you're showing the investor, I got a clear path. I know what I'm doing. I've done the research. I know who the competitors are, because a lot of people, they try to launch something like, we don't got many competitors in the space. I was consulting someone who I consider, I wouldn't say a friend, but a colleague in crypto, and they hired me to help them, right? And they were like, man, we have no competitors in the space for this particular software. And when we first started, I'm like, I don't know, but then I started researching, and they were building for about a good 4 months.
Yeah.
So then I do some digging. I hit them up like, bro, y'all got competitors in the space.
Oh, okay.
So you need to be making sure that at bare bone, you got exactly what these guys got. They didn't even know that there were competitors.
Oh man.
And bro, all I did was go on Google in one instance, and I found it. And I'm not knocking my guy. Great entrepreneur team. However, when you miss that, then for me as an investor, it scares me to invest in what you got going on, because you couldn't find that there were like 5 other competitors already in existence, and you're marketing your product as the first ever.
Gotta do that due diligence.
Bro, so these are the things, again, that you have to do to become more attractive to investors. These are the things, if you got a new idea and you have no traction at all, the product isn't done. I've been there before. Like my first investment, bro, let me tell you what I did. Actually, my first I don't want to get them mixed up. Yeah, so the Sandmash thing, that was more like a partnership kind of money in. But my first investment outside of family and friends was a tech product that I created. And I didn't have a product. All I had was designs. So to answer your question, all I had was designs, dude, that I created. They wasn't professional. Because a lot of people think that, okay, it needs to be a certain level for someone to invest in. No, dude, people will invest into starting something new. Again, you just gotta have a play.
Yeah.
So this is what I did, right? I researched the market, and this particular market was the network marketing industry, right? At the time, they didn't have any like real mobile marketing software at that time. So I came up with this really cool concept, and that involved text message marketing, but involved in the app and campaigns and all that stuff. And it really was nothing like that during this time period. Right. I did all the research. So what I did was I went to a multi-million-dollar company in the States. We had 1 million plus sales reps, in the world. And I went to them. Their office was in Vegas. And I basically said, if I built this, would you distribute this in your network, right? Because in the network marketing industry, they always put tools out that the independent reps pay monthly for, right? So they said yes. I had them to sign an MOU, a memorandum of understanding, and I took that to a set of investors, and that's how I got my first $100,000.
Got it.
Right? And we ended up raising like $300,000, and then we sold the company for 7 figures later.
Nice.
You know what I'm saying? But again, I started it. I didn't have anything, bro. I didn't have a hard product, but I was able to use the money that I raised to start the development.
Yeah.
You know what I'm saying? So for me, that's why I tell people not really having any excuse, because dude, I didn't have anything. I did not have a physical product.
Right.
All I had was that little signed agreement that the company said they would distribute it. So that's one of the kind of secret sauces that I teach a lot of like entrepreneurs who have products. Like try to get you potential partnerships, try to get distribution partners, try to get marketing partners, any type of partners you can establish, because what that does, again, it shows the investor like, man, I've already done my research and hey, I'm ready to go. Right. I got my business in play. I just need your money to hit the green button to really fire it up.
Hell yeah.
You know what I mean? So
love it, man.
Yeah,
Love it.
man.
That's amazing, man. This guy's a serial entrepreneur for real. Tell me, so how does an entrepreneur know if they need an investor or not? Like, at what point do I feel as an entrepreneur, like, when do I need to seek an investor?
Well, there was a couple reasons. Either one, entrepreneur have the money to kind of develop it like they want to, or either you got the money but you don't want to use your own money. Maybe an entrepreneur, maybe they don't have good credit, so they can't go and get a loan or a line of credit. You know what I'm saying? Maybe you don't have any savings, or maybe you as an entrepreneur, maybe you may have the money, but you say, hey, I need more, and I want an investor who can also bring value. So there's a couple different reasons why, or you don't got enough money to scale it.
Right.
You know what I'm saying? Either way, you're gonna need money to develop something, scale something, grow something. Either way, you're gonna need money. It's either gonna come from your pocket or somebody else's.
Right.
So in entrepreneurship, we always talk about OPM, other people's money, and OPR, other people's resources.
Right.
So a smart entrepreneur, you don't want to use you don't want to come out your pocket if you don't have to. You want to get that risk capital. You want to talk to somebody who say, hey man, I got an extra 20K that's just sitting around. Hey, I'll invest with you. Right, so what that does for you, you can keep your money in your pocket. Right. You know what I'm saying? But that doesn't mean you can just be frivolous with other people's money. But I'm just saying you can keep your money in your pocket, and I can leverage your resources to do what I have to do. Right. And I can probably get some value from you as an investor who you got your own network. So as we're growing this business, you're making calls too. My investors making calls. You're like, hey man, I just invested in this podcast is super dope. Hey, you guys take a look at it. Hey, who you got? Boom, boom, boom. You know what I'm saying? Because I'm invested in it. So now that investor, they're working too. Yeah. See what I'm saying? So investing is not just about the cash that you could get. It's also leveraging that investor's network at the same time. You know what I'm saying?
Yes, sir.
So I would say that, it's never like, oh, I just need it now. It's like, okay, if I got an idea, you got a brand, you got a product, and you're trying to scale it. You want to get it out more in the world. Maybe you need more Facebook ad money. Okay, you need more Facebook ad money. It's like, if I have more Facebook ads running, then I know I can reach more people. Okay, well, you need money. Right. So it's either going to come from your pocket or somebody else's pocket. That's when you're going to know. Right. At the time that you're either ready to develop something or scale something. Right. You want to use your money or somebody else's. I mean, it's as simple as that.
That's simple, guys. Come on, I hope you're taking these notes, baby.
Yeah, and it's not hard, man. Like I've had people even in the entertainment film industry like ask me questions like, Terry, how do you get people to write you a check? Like put the plan together. Like I don't raise money in Hollywood, like films. And I don't understand that, that I've never done, for Hollywood.
Right.
But I would think it's the same. At least the same methodology. Like put the play together. If I'm working on a film, you're trying to launch a film, you're probably going to go and do research on films who perform the same way. Again, that's not my game. What I'm saying, I'm thinking that you're probably going to go and do research on other films that perform. How did they do? If they got certain connections, then okay, I'm raising $100,000 for a film or $1 million or whatever you need. And you know what I'm saying?
Yes,
so
sir.
are you doing your de-risking? So I know one of my guys who he does movies and he goes out, he makes sure he has certain type of actors, like in the movies, to make that attractive to an investor. Hey, we have somebody attached to it.
Yeah.
Again, I do not raise money for film. I'm just saying in conversations that I've had who raise money for like film and stuff.
Yeah, it
like
makes
that.
a project more desirable because you actually have an entity that's a proven concept attached to it, so it's more likely to succeed with that entity attached to it.
Right.
So, yeah.
Right. So like every industry is different. Real estate is different. We talk about that. Real estate is backed by asset. So the things that I would have to do if I got a personal idea, like a tech company or a brand or an e-com store or you're an artist or you're an author, it's different with real estate because real estate is super easy.
Right.
Like it's just super easy if it's backed by an asset. Like, you know what I'm saying? So it's just different. So I like to say, like when you have a personal business idea or if you have a business that's running, it's a different fact. So to get 1,000 or 10,000 or 20,000 is a major feat when it's a project that's not backed by an asset.
Right.
You see what I'm saying?
Yes, sir.
So I commend anybody who say, yeah, man, I got an investor, family and friend that gave me 10 grand. Congratulations on that 10 grand.
Hell yeah.
Because that's a big deal. Because everybody not forking 10 grand. So if you got 10 grand, you must have did something right.
Right.
See what I'm saying?
Yes, sir.
But in real estate investing, like, that ain't a lot of money. Hey, you're right. In real estate, no. But to convince somebody to give you 10 grand for a Facebook ads or 10 grand to help you develop a product, that's a big deal. Yeah. And especially for an entrepreneur, you don't know where they are in their life or what they're trying to do. Like 10 grand can totally change somebody's life.
Right.
Taking an idea, a business idea, and making it reality, that's a big deal.
Right. It's also an art to it. You know what I'm saying? I mean, you're really pulling on people's heartstrings and mind strings to get them to believe in you,
Right.
and spend their hard-earned money. You don't know what they did to get this money.
Absolutely.
But they believe that they can give it to you and you can, make it flourish. So,
Right.
yeah, there's definitely an art behind that, man.
For sure.
And going into the art side of things, I was looking at your book and you broke down the 5 C's. So can you share that with the people? What are the 5 C's?
Absolutely. So it's my kind of like framework that I do every time, like if I come up with a new idea or something like that, and stuff that I've used pretty much all my life, I just turned it into a framework, and I thought I love the idea of calling it the 5 C's.
Yeah.
But the first C is basically collect, and that's where we talk about collecting all that data and everything that we talked about. Then moving on to connecting, and that's when you're going out and you're trying to meet different investors, you're talking to family and friends, you're talking to potential angel investors, any and everybody. You're telling them, hey, I got something that's cool, I'm building. Hey, if I do this, would it be something you'd be interested in potentially investing into? Or maybe you'll be talking to potential marketing partners or potential distributors. Hey, I'm working on building something. Would you partner with me once I do it, right? So that's that second C. Third C is create. Create is when you begin to put together your investor pitch deck or your investor one sheet, which basically just kind of highlights, everything about the opportunity, what it is, if there's a problem in the market, how you solve it, if you have a team, what's the business model, what's the revenue model, what's your go-to-market strategy, how much money do you need, how are you going to use the money, how you guys are going to make money, do you need to do a 3 to 5 year financial projection, how long is this money going to get me, right? You're going to say, okay, I'm trying to raise 50,000 is going to give me 6 months of, we call it runway or operation. So we know after 6 months, you're going to either need to have to raise more money or you're going to try to make sure that you're starting to make money in that 6 months. So that create, and then we got captivate and command. So captivate and command, that's I call it the 5 C groups now,
yes.
Right? Because it's like 6 C's, but I'm calling it 5 C groups.
Yeah.
But captivate and command, that's when you get in front of an investor and you want to captivate them. One, showing them that you, again, done all the research. Remember, you grabbing all that research that you did in the first C, right?
Yes, sir.
So you're taking everything from that first C. I'm sitting with you, I'm doing the pitch, and I'm telling you, hey man, 3 out of 5 people prefer blah, blah, blah. 50% of people said X. I'm saying in 2025, the industry is gonna, I'm passionate and I got my stuff together, right? So so now I'm captivating you,
yes.
right, with that.
Yes.
And now I'm commanding attention and I'm commanding respect because now I got credibility with the research and the data. So that's why I put that together, is command and captivate. You know what I'm saying? And I get excited, man, when I start to go at
Love
it.
it.
And then the last C is close. And this is where you're either going to get the yes, no, or maybe so, right? And of course, there's going to be things you're going to have to do if they tell you yes. There's next steps. There's going to be things you can do that you're going to have to do if they tell you no. There's next steps. And I want to talk about that for a quick second, right? So if somebody tells you no, which is 100% okay, and I'm talking to somebody, whoever watching this, I'm talking to you, right? If somebody tells you no, it's totally okay. People are going to tell you no on that journey, right? But this is what you're going to do when somebody tells you no. Hey, Mr. Investor, I appreciate it. I'm sorry, it's not a good fit for you, basically. But what I would love to know is what could I have done, or what kind of threw you off about the pitch or about the opportunity. Let them talk. Let them give you constructive criticism. They might say, hey, I hear it, I see it, but I don't think blah 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 blah. Okay, cool. So they might. So you want them to tell you maybe where they're not clear at, right? One, because you as a salesperson, we're gonna go back and say, well, actually we talked about that here, right? You wanna make sure that you really filled the holes that they have in their mind, right? So after you filled all the holes with all the research, because you wanna go back to it. Remember over here, remember I said that actually 3% of people, whatever you can use. And if it still doesn't work out, okay, cool. And do this, always do this. If somebody tells you no, and this is just in sales period, what you gonna do if somebody tells you no? In sales.
In sales?
You're still going to ask for what?
The close.
What? The close. And if they don't close with you, you're still trying to get what?
Feedback.
Feedback, and what else? You going to leave with?
Constructive criticism, what?
I'm still leaving with a referral.
Oh, referral. Oh, of course. Yes. Of course.
I'm still leaving with a referral. So, hey, this wasn't a good fit, but do you mind connecting with somebody who this may be a good fit for?
Got it.
I'm always leaving with a referral. So that's why it's still a lot of soft, like even in our course, I teach a lot of soft skills. So it's not just information, it's the nuances.
Yes.
It's that finagling. It's that connecting. I teach little things because remember, some people don't have that background like you have connected with people. So I'm teaching people like they don't even have sales experience. I'm teaching stuff like, hey, you know what I mean by that? When somebody do this in sales, like little things, the little touch points.
Yes.
It's connecting points.
Right.
I'm teaching when you sit down how to build rapport with an investor if you don't know this investor. Because when I got into sales back in the day, I'm 43 years old. So I was selling in my early 20s.
Yeah.
I started selling windows and siding. Right. So one of the things I was taught, if I get in front of somebody, I'm looking for something to connect with.
Right.
If I see a Jordan picture on the wall, I'm talking about Michael Jordan. If I see pumpkins, I'm talking about pumpkins. If I see lights, I'm talking about, hey, what's up with the lights? I'm finding some type of connection point because what I'm trying to do, I'm trying to break down any type of wall because people don't like to be sold. Even they want to, but innately, people don't like to be sold.
Building rapport.
I'm building rapport, and I'm going deep in that. So still try to get that referral. And if they tell you maybe so, what you have to do in that is to continue to still send them information because maybe so is not the answer that you really want. But however, you still got them. They still hooked. Yeah. They just ain't cut you the check. They're like, maybe so, give me some time. So what you're going to do as your business continues to move forward, you're still going to send them updates. You're going to say, hey, Mr. Investor, hey, man, our company just got a feature. I just want to send you an update. Hey, Mr. Investor, hey, we just partnered up with XYZ software company. I just want to give you an update. So what you're doing is giving them so much updated information where you're getting closer to like, okay, oh, they still moving. You know what I'm saying? Because the idea is, hey, I need your money, but at the same time, I'm still gonna make this business work.
That's right.
And that's what investors want to see. Like, man, I didn't give them the money, but man, they still moving it forward. And that FOMO may kick in if you're missing out. So that's what you do in that close phase. You're gonna get a yes, no, or maybe so. And again, we teach different things, but in each response, there's things that you have to do. There's next steps. You gotta make sure your business is set up the right way. Right. Make sure your bank account is set up the right way. You would think that people would know that, but sometimes you gotta teach that. Right. Are you gonna be an LLC or a corporation? You know what I'm saying? It matters. You know what I'm saying? That you got an attorney. Making sure your attorney's looking at the documents. I mean, it's so much that we kind of, they gotta have, but it depends on the response that you get. But those are the 5 C's, man.
That's what's up, man. Thank you for breaking that down, my good brother. So tell me, what numbers should a entrepreneur have prepared in a pitch meeting?
100% they need to know how much money exactly you need, right? And if we can, and just to say too, I don't want them to always think it's just a pitch, right? And we use that in the startup world, but we want to make sure it's not just a pitch, it's a presentation, it's a proposal, right? But you need to make sure, one, that you have how much money you think you need, and how you're going to use it. Those numbers, you need to have that. You need to know how is 10% going over in marketing, is 10% going over in hiring and distribution, however you're going to use the money. And then also the other thing you're going to have to do is know how the money, as the money goes out, when it comes back in. So you're going to need to put together like a 3 to 5 year projection, right? Depending on what the business is. If the money you're raising is for like a one-time, like an event, hey man, I need 20,000 for an event. It's different. You're not going to put together a 1 to 3 year projection. It's just more like, okay, if you invest 20K, we're going to do an event. This is how the money works. You know what I'm saying? So it's different versus a short-term play versus a long-term play. But I would say definitely you need to know how much money you really need, how you're going to use the money, and then how you're going to return the money back to the investor.
Awesome.
Those are the key, the 3 key points that you need to know.
Right.
There's more, of course, but those are the 3 keys.
That's going to be in the course. He can't give everything out. You got to buy the book and get the course.
We're going to drip some sauce out, man, but hopefully like this is enough to, I want to help people, man. I want so many entrepreneurs with great ideas, man, and like we sitting on stuff and everybody doesn't have good credit. Like you see people saying all the time, man, get the business credit, like let's build our credit up, which is dope. But check this out, when you build a business and say I use my credit and I go get a line of credit, I use credit cards and everybody's saying do get business funding and stuff like that, right? When you do know that when you use that $20,000 off their credit line, guess what? That bill either got to be paid back in full next month or you got to start making payments on it. Right? But the cool thing is when you're dealing with investors, right? The money's paid back at an agreed upon time frame. So now you're talking 3 months, 6 months, a year, 2 years. So I would rather work with an investor that I can work on a negotiated time frame than to have to go and get a line of credit or leverage an asset to, you know what I'm saying? And I get it. It's everybody's teaching it. I totally get it. And I feel like there's a time and place for everything. But if I'm investing in something that, especially if I'm developing something new, right? So even because, dude, sometimes even the best preparation, the best plan, sometimes things go south. Sometimes you may have to pivot. So what if say if you go and get a line of credit or you use your credit cards, you go get a loan and you start developing, you go out the market and you get some different feedback and you got to change, you got to pivot. Right. And you thought you were going to be a place at revenue, but you're not because the market is telling you otherwise. So now you got to change direction. Right. But guess what? Who's knocking at that door? Creditor.
I need my money.
I need my money back. That loan, that line of credit, they want their money back, right? But again, with that investor, man, it's like, hey, this is the plan. However, if this happens, we can start paying back at here. You know what I'm saying? So now you're talking 6 months, a year, whatever negotiated time frame you think you need to achieve what they call product market fit, to make sure there's a fit in the market. You know what I'm saying? Or like I said, if it's a one-time type of thing, that's a little different. If I'm raising money for an event, I'm about to do a concert, I need 100,000, I need 200,000, I need $500,000. That's a little different. You know what I'm saying? But that's kind of what I like to teach now. If you can't, for whatever reason, you can't go and attract an investor, of course, leverage your credit up, man. Like build your credit up, get business credit, personal, whatever you got to do to get it. I mean, you got to move your business forward either way.
Yeah. Okay. Is it true that you can leverage trade lines to get business funding?
100%.
How so?
So again, that's not what I teach, but 100%. So you can actually add trade lines to your personal credit and your business credit. So the idea with that, again, I know people who really teach that. Okay. So I'm not the expert in that, but I've done it before. So the idea is to take those trade lines, put it to your business credit, right, and then boost your score up. Okay. So that's the idea of that. So you can do that for your personal credit. We've done that multiple times. And then, of course, you can do it to your business. And yes, again, and those trade lines, of course, you're paying anywhere from, $500 to $2,000, depending on what you're doing. I mean, there's other strategies like buying shelf corporations. I mean, there's so many different things you can do to get funding. Yeah. But the thing is, like, you don't want to, I know a lot of people who've done that and they deceive the system. So I'll go and get business credit in the LLC, build it up. Oh, it don't work out. Okay, bankrupt, and go create another LLC and get business funding again and keep this whole loop to loop. Yeah. You know what I'm saying? But then that's deception. Like for me, I don't want to be that person. I'm talking about building. I'm talking about making an impact in the world. You know what I'm saying? I'm not trying to abuse the system. Right. You know what I'm saying? So
yeah, and I know responsible. And I know gentlemen that perform in that deceitful form as well. But I meant more so like to get business funding to accomplish a goal, whereas you don't really need an investor. Now you are your own investor, where you're leveraging these trade lines and then you're applying for business funding. Then you get the funding based off the trade lines that's attached to it, and then you use it for what you want to do.
But once again, like I said, you got to pay that back.
Correct.
At a time frame.
Right.
So that's a lot of pressure that you're adding to yourself on your business, because now I got 30 days or 60 days to pay that money back versus working with an investor that's going to give me 6 months to a year to 2 years to 3 years to pay the money back.
Well, like you said, had a play in place.
Yeah, had a play in place. But that's what I'm saying. But if you can't, I'm just saying if I had to go either or, there's pros and cons to everything.
Correct.
I'm just saying for me, there are times, go get that. If you know that you have revenue or you got money coming in that can pay those notes when it comes in to pay off, by all means, go and do it. But a lot of people, they haven't figured out that, I call it the 3 M's of money: making it, managing, and multiplying, right? So some people haven't figured out that management part. So everybody's hyping up business credit, go get the credit. But like if somebody's not mentally ready to handle, that bill when it comes back, so guess what's gonna happen? They ain't paying it, then the credit's back down. It's this whole system again. So I'm just saying, it's pros and cons to everything. But at the end of the day, I believe the numbers are 47% of entrepreneurs do self-fund. Do self-fund. But a lot of the reason is because they don't understand how to go and pitch or present to investors to get risk capital. You know what I'm saying? So it's really just the education of understanding how do I approach somebody? How do I get rid of the fear? How do I understand I can go talk to my guy right here and say, hey man, I got this dope idea. I'm looking for investors. I'm willing to give an investor 10%, 20%. I'm able to give them 3% off of the top line revenue, bottom line revenue. It's just the education.
Right.
You know what I'm saying? So the same way that everybody's educating online right now about going to get business funding, personal funding, all that good stuff to leverage business, what I'm trying to do is teach that other side too. Hey, there is risk capital. You got to understand that the biggest companies in the world have not been built on just going to get lines of credit and business funding. Like, it's just not. When you look at the TikToks of the world, when you look at the Instagrams of the world, when you look at the Facebooks of the world, and all these companies that's being acquired for millions of dollars, guys, they had investors because they had to have money to scale your business. Right? So that's what we're talking about, like positioning yourself. So even if you had to self-fund your business in the beginning, right? Dope, great. And a lot of times that's actually good, because what that does is it shows an investor, hey, I got skin in the game. So again, it may not be you going to get some funding, but maybe you work a full-time job and you've been carving off some money off of your salary, and you're investing into your own business to get it to the next level. Great, right? So when you meet an investor, you're going to tell them that, hey man, I've been self-funding. So again, I'm scooting closer to you again, because I'm like, oh man, okay, he got skin in the game. He believes enough in his own product where he put time, money, and energy, all, you know what I'm saying, into this. So that actually helps. But at the end of the day, man, the biggest companies in the world, you're talking about the companies that become $1 billion companies, that becomes valued at 100 million. These guys get investors. You're in the entertainment business. Kevin Hart, come on, he just got tons of investment money, right? Look at all these entertainment entities. They're receiving tons of money, right? Investment dollars. Private equity companies are investing into them, right? So in order to take those businesses to those big levels, you're going to need investors, hands down. So again, everybody's on different levels, so you can literally attract investors to products that that doesn't even exist yet. Again, you're going to raise investment dollars if you need to scale something in your existing business or acquire something. I'm gonna pause on that, because, for example, you don't have to be the person with the idea. You can be the person that say, hey, I need money to go acquire an asset. I want to go acquire a business. So say, for example, Shopify store. You can buy a revenue generating Shopify store right now? Yes. You see what I'm saying? So check this out. How easy. I'm giving you plays, bro. So it's like, I can go to an investor, somebody got a little extra cash, one of the homies, yo, how much cash you got sitting there? I got actually 50. Hey, yo, let's go buy 3 Shopify stores. You put the money up, I'm managing. Beautiful. Yo, okay, then again, put the play together. Yo, this is the industry, this is the opportunity. Shopify, e-commerce doing this. Hey, we got 3 stores already generating this. We're gonna buy it from this. So if you go buy a Shopify store, you're probably gonna be in the red probably for maybe say whatever amount of time, but you're gonna see, okay, as long as we keep feeding the Facebook ads, okay, we're gonna be in profit here. See what I'm saying? So it's not always about creating your own thing. everybody's talking about YouTube automation, right? YouTube automation, guess what? You'll still need some Facebook ad money, some advertising to drive it. So guess what? Hey, my dude, I'm thinking about doing YouTube automation as an opportunity. I'm gonna need like 10 grand.
Right.
You see what I'm saying?
Yes,
so now you have a passive income play, and your homeboy, a friend, close friend, who had the money invested with you, they don't got time to manage it. Now y'all kind of like this partnership. Your homie got the money,
yes, sir.
You got the management, and now you got a recurring revenue play happening over here.
Yeah.
See what I'm saying?
Yes, sir.
So like these are plays, like guys, that you can do all the time. Just put the play together. That's it. And if you put the play together right, there's people who will say, hey man, I'm down for it, I got it.
Yeah.
You see what I'm saying? Just put the play together. So that's what we're teaching people. So it's not just about going to get 100,000 or like teach me how to raise $2 million. I'm teaching people how to go get it even at a small level and kind of think differently. You know what I'm saying?
Yes,
so again, you're either going to need your money or OPM. And anybody will tell you, I'd rather use OPM and OPR any day of the week and have to go to my savings and use my savings. But everybody's on different levels, man.
Yeah.
Some people don't want to risk their own savings, but there are people who want to risk that money. And you got to think, you got a homeboy that's sitting on 50,000, just say 50,000, 20,000 to play with. He's trying to grow his money.
Right.
So, and you as an entrepreneur, you giving him plays. So it's an even exchange. That his money's no greater than the idea and what you're bringing to the table.
Right.
But he needs you and you need him.
Right.
So we got to look at this whole investor-entrepreneur relationship different. You know what I'm saying? So that's kind of like what I teach people. It's super simple. Just put the play together.
Put the play together, man. When does the course drop?
Course, man, we're probably gonna go live first of the year, January. But right now, the ebook we're launching next week actually.
Okay.
The ebook will be available to purchase, and then we'll also be offering group coaching. We're launching a entrepreneur accountability program as well. So we got a lot of things that we're launching, man, in the next couple of weeks, man. So 2023 for us is go time, man. So we're super excited. We're trying to impact as many entrepreneurs as possible, create an environment for them to be successful, and bring as many people to the table. So it's not just gonna be me, man. We're trying to build a community, man, of like fired up entrepreneurs to support other entrepreneurs, especially, man, like here in LA. Because you like in Atlanta got it a lot.
Yes, sir.
In Atlanta, they killing it. They got that culture, but in LA, we haven't quite created that community entrepreneurship culture. So I'm working on something right now to kind of bring, high performing entrepreneurs and CEOs and independent, people together, man. So I'm super excited about that. But that's what our 2023 looks like, man.
That's amazing, my good brother. I look forward to being a part of it, man. Let the people know where they can follow you, where they can get the book, and do business with you.
For sure, man. You can follow me on Instagram at I am Terry Briggs. Check me out at online for the book, Investor Magnet ebook. And then the course, we'll let you know. Once you go to investormagnetebook.com, then we'll lead you to where to go for the course when it's ready. But hey man, just check us out. We're gonna be putting out a podcast too.
Awesome.
First podcast is called Investor Magnet. The other one is called Beyond Money. But because I believe that podcasts are top of funnel for companies.
Yes, sir.
So we decided to create our own podcast, just kind of talking about investors and entrepreneurs. So that's what the Investor Magnet podcast is about. And then the Beyond Money podcast is where we kind of talk about the human side of entrepreneurship, going beyond money.
Right,
you know what I'm saying? So that's what we're excited about. So I'll just keep letting you know what's going on. You can let your listeners and your viewers know what's popping, man.
Thank you for coming on the show, man.
My
Listen,
pleasure. I love
Terry Briggs, man, the Investor Magnet. Make sure you get the book, the course, the merch. I'm sure you got some merch.
It's coming.
Ah, man, let's go.
And it's dope. And you want it? Listen, can I say this one last thing?
Do what you do, brother.
Listen. The merch is definitely going to be important. So one thing we are going to be offering a lot of our students, man, it's just like little plays. Like say if you got something that you need investors for, little plays like this. Go make you a shirt and say investors want it.
Oh.
So that way, while you walking around and your shirt says investors want it, guess what? What you need investors for? I wish we could drop a mic right now. You see what I'm saying? It's like little things like that we can do. But yeah, man, we're definitely going to be offering merch and kind of, we're going to kind of take, different quotes and different things we say in this path that we're building and kind of, create some really dope shirts and stuff like that. So we'll have all that available, man. Plus some other little secret sauces we're putting together. And we're putting together our first event in March. So the Investor Magnet Summit. So I'm really excited about that, man. So we're looking to bring some
in LA?
In LA, dog. We got to bring this heat to LA, man. Like I said, Atlanta got it a lot. and there's a couple people in Atlanta I want to work with. Hopefully we can get them out here. But yeah, man, I'm excited, man.
I'm excited for you, brother.
Excited.
That's amazing, man. Well, stay tuned. My man Terry Briggs in the building. Jonni Vegaz. This has been another episode of Sleep Is For Billionaires, the podcast. Stay tuned for more episodes to come. Make sure you like and subscribe to the channel. Make sure you get you some of that good old Sleep Is For Billionaires merch.
Let's go.
Stay tuned for more episodes to come. Thank you for watching. And we out.
Sleep is for billionaires, baby.
Yeah.
Wake up.
Good stuff, my brother. That was great, man.